Welcome to Alpha Recap. I'm Juniper. Today we walked through a tape dominated by litigation shocks and a fresh wave of AI infrastructure momentum. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. There's a lot to unpack. Some sharp headline moves and a broader technology narrative pushing through.
Let's start with the biggest market shock of the day. Erasca plunged roughly 48% after reporting a patient death and facing patent infringement accusations, and a securities class action followed. That wiped out about $2.8 billion in market value.
Yeah, honestly, I was a bit surprised by this one. When a biotech stock moves that much on safety and IP allegations, it usually creates an immediate trading and funding headache for the sector. So what really stands out here is the dual nature of the shock. Clinical safety on one side, intellectual property on the other. Both tend to prolong uncertainty because they trigger regulatory checks, litigation timelines, and often investor redemptions.
Right. And the other thing is the speed. A single day took out nearly $3 billion of value. That kind of move raises volatility for anyone with biotech exposure.
Exactly. And when law firms jump in quickly with class action solicitations, it often signals that headline risk will remain elevated for weeks, if not months.
Speaking of litigation, Vera Mobility also landed in a securities suit after it disclosed a big customer pulled back on renewal talks. Its CEO left, and the company launched an internal review.
That one is a concentrated customer risk story. When a single customer represents a meaningful share of revenue and those renewal talks break down, it not only hits next quarter guidance odds, but raises governance questions. Investors tend to react to both the revenue gap risk and the potential distraction of an internal probe. And to add to that, law firms were out with solicitations across several names today, everything from industrials to other biotech names, so it's not isolated.
Right, but it wasn't all legal headaches. We also saw some legal relief. The Supreme Court closed a suit involving Cisco, and there was a decision helping Exxon in a long-running Cuba compensation matter.
Which is a good reminder. Court rulings can both remove uncertainty and create it. For companies like Cisco, getting one overhang removed can be a positive, albeit sometimes sentiment-driven, catalyst.
Switching gears. AI infrastructure was a major theme today. Open standards and tooling showed up on multiple fronts. Opaque 3.0 and an open-sourced agent manifest backed by industry players, Envoy AI Gateway hitting version 1.0, and Enterprise DB launching an agentic database with native governance.
Yeah, that tracks. This felt like an adoption day. When open governance projects and production-grade tooling converge, it lowers the friction for enterprises to pilot and then buy.
So, to be clear, why does open source matter here? What changes for an enterprise choosing an AI platform?
Good question. In plain terms, open standards give buyers consistent ways to verify models, control data flows, and integrate with existing systems. If you have an open protocol everyone supports, you don't have to bet the farm on one vendor. That speed up is what analysts mean by faster procurement cycles.
And on the hardware side, there were signals too. Opaque's ties to chip names and Envoy's backers, big data and cloud platform users, suggest the ecosystem is trying to bridge software standards to the silicon and cloud layers.
Right. The Avi also launched a validation solution that can emulate AI workload traffic at scale without GPUs, which is interesting. It addresses a testing pain point for data center operators before they spend on accelerators.
That's a good point. Testing and validation can be undervalued until you hit production problems.
Exactly. And Enterprise DB's agentic database idea is another angle. Keep AI compute close to the data with governance built in, instead of shipping sensitive data out to a third party.
We touched on Oracle earlier. They disclosed a workforce reduction tied to AI. The figure was about 21,000 employees.
When a company of that scale announces roughly 21,000 headcount cuts tied to AI adoption, it's both an execution and a signaling event. It signals confidence in automation and AI tools to replace some functions, but it also raises questions about near-term revenue continuity and how quickly cost savings will show up. And, when big outsourcers or service-heavy firms reorganize like this, there's often a tug of war between the client demand for continuity and the vendor's push to re-engineer costs. That can create short-term revenue risk even as margins are retooled for the long run.
Let's pause for two quick reactions.
Right. Yeah, absolutely.
Another theme we scanned was tokenization and crypto rails. Mantle listed a tokenized version of an equity ETF, a tokenized representation of the Franklin U.S. Equity Index ETF, which is one of the earliest on-chain ETF representations on that layer.
It's a small but meaningful step. Tokenized ETFs lower certain frictions for on-chain users, custody, settlement, and composability with other decentralized finance primitives. But the real test is trading volume, custody integrations, and importantly, any regulatory commentary. Without those, it stays an intriguing product rather than a market mover.
So, in practice, what would you watch to see if that becomes a larger market change?
On-chain liquidity, whether institutional custodians support it, and whether other asset managers replicate tokenized ETF listings on multiple chains. Those three items collectively tell you if tokenization is moving from pilot to product.
On the clean tech and trade show side, there were product launches at Intersolar. Zendur unveiled an AI-powered home energy ecosystem called ZEN Plus Home, and GCLSI rolled out back contact solar modules and flagged BC cells as strategic.
Trade shows are often where product stories meet early buyers. These launches can lead to pilot contracts and partnerships. But again, follow-on commercial announcements are the real signal that a product will move the revenue needle.
And a notable policy shift. Saudi real estate opened a portal taking foreign ownership applications via a new Saudi properties site. That could broaden capital flows if the follow-up rules look investor-friendly.
For that to matter economically, we need quotas, fee schedules, and tax rules. Until authorities publish those specifics, it's a policy window with optionality, not an earn now event.
Quick hits. A rapid list of other things that moved the tape. Cisco had a legal overhang removed by the Supreme Court. Exxon got a favorable ruling on Cuba compensation. IBM saw shares climb after presidential praise at a quantum summit. Viavi launched its Ethernet validation product, and Industrial Realty Group completed walls at a roughly 612,000 square foot Auburn project.
Those are the kinds of items that can move single names or subsectors in a trading day, especially when combined with the larger themes we talked about.
Let's connect some dots. One pattern we saw: convergence of AI adoption and corporate re-engineering. Oracle's cuts plus these infrastructure releases suggest companies are both building tools and reshaping workforces to deploy them.
Right, and the follow-through matters. Tools and open standards lower integration risk, which helps software and chip vendors. But system integrators and service-heavy businesses face execution risk when they try to replace people with technology at scale.
Another pattern? Legal risk is cross-sector and rising. Biotech safety and concentrated customer disputes produced immediate share damage today, and law firms were actively soliciting lead plaintiffs across names.
Exactly. Those events increase headline volatility and can affect access to capital. For companies, that often means more time spent on disclosure, which is not great for execution.
And finally, standards plus open source seem to be pushing procurement cycles forward. When governance projects like Opaque and production projects like Envoy line up with vendor products, integration friction falls, and trials can scale faster.
That is an adoption acceleration pattern. Analysts will be watching for partner integrations and customer pilots first, because revenue lags adoption by a few quarters in most enterprise environments.
Quick reactions. Right.
Yeah.
Okay, looking ahead. Key things to watch tomorrow and in the near term. Erasca filings, any SEC or court updates, or company statements tied to the patient incident and IP dispute. For Oracle, management commentary and any disclosed cost savings numbers tied to the workforce reduction. For Vera Mobility, updates on the internal review and talks with that large customer.
And on the AI infrastructure front, watch for partnership or pilot announcements from major platform vendors that would translate open standards into early revenue. For tokenization, monitor on-chain trading volumes and custody integrations.
Key takeaways. 1. Large legal shocks like Erasca and Vera Mobility drove headline volatility and warrant close monitoring of filings and disclosures. 2. AI infrastructure momentum is broad and multi-layered. Open source, enterprise databases, and validation tools all surface together. 3. Tokenization in the form of a tokenized ETF moved from experiment to a live listing, but liquidity and custody integrations are the next checks. And 4. Policy moves and product launches require follow-up detail to convert narrative into measurable impact.
To add briefly, expect elevated short-term volatility as these headline events digest, even as multi-quarter structural trends like enterprise AI adoption work their way through budgets and procurement cycles.
A quick investment disclaimer. Our discussion is for informational purposes only. We are not recommending buying, selling, or holding any security, and this is not personalized advice. Analysts note these items as market signals. Monitor official filings and company statements before acting.
Yep, data suggests momentum in some areas and headline risk in others. Keep watching the filings and pilot announcements.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back with more recaps after the next close.
Thanks, Josh. That wraps today's Alpha Recap. See you next time.